AMD stock ended Thursday's trade at just under $158, down about $1.24 on the session. At first glance, that might not seem like a major event, but when we look deeper, it connects with some big headlines that rippled through the tech world this week. Intel and Nvidia announced a $5 billion partnership, a move that immediately raised eyebrows across Wall Street. With two of AMD's biggest rivals joining forces, the market was quick to ask, what does this mean for AMD's positioning in the semiconductor and AI landscape? Let's start with the market reaction. AMD dipped sharply early in Thursday's trade, hitting a low of around $157 before recovering much of those losses into the close. That kind of intraday action shows you two things at once. First, it highlights how sensitive AMD has become to competitive headlines, especially anything involving Nvidia in the AI chip space. Second, it reveals resilience. Despite the negative headline risk, buyers stepped back in, stabilizing the stock. That resilience matters, because it suggests investors aren't panicking about AMD's long-term story even as rivals make splashy announcements. Now let's unpack the Nvidia-Intel tie-up. The deal reportedly involves Nvidia tapping Intel's foundry business to help produce chips, as well as collaboration on AI-ready PCs and data center products. On paper, it looks like a win-win. Nvidia secures additional supply capacity at a time when demand for AI chips is exploding, and Intel gets to demonstrate that its foundry strategy is real, credible, and valuable to top-tier partners. For AMD, however, the optics are tricky. It suddenly looks like two competitors are combining forces in areas where AMD has been gaining traction, particularly in AI servers and PC acceleration. But here's where perspective is important. Partnerships in the semiconductor industry are not always as straightforward as they sound. Nvidia relying on Intel's foundry is actually an admission that Nvidia can't meet demand on its own with TSMC. And Intel, despite its ambitions, still lags behind TSMC and Samsung in advanced process technology. If Nvidia is forced to split production between TSMC and Intel, it could even slow down the rollout of some products or complicate its supply chain. In other words, while this partnership generated headlines, it doesn't automatically mean AMD is in trouble. In fact, it may highlight just how difficult it is for even the biggest names to scale in this environment. AMD, on the other hand, continues to focus on execution. Lisa Su and her team have positioned the company as the credible alternative to Nvidia in AI accelerators. The MI300 has already secured wins with Microsoft, Oracle, and Meta. The next-generation MI350 is expected to push even further. And AMD isn't splitting its attention across too many fronts the way Intel is. Instead, it's concentrating on CPUs, GPUs, and the interconnect between them, essentially, the building blocks of AI infrastructure. Let's also talk about software. For years, Nvidia's moat was CUDA. But AMD's ROCm ecosystem has made steady progress. We're now seeing large language models being trained and deployed on AMD hardware with ROCm support, and hyperscalers are increasingly comfortable running AMD accelerators in production. That progress undercuts the argument that AMD is forever stuck as a second-tier option. So while Nvidia gains headlines with Intel, AMD is slowly, steadily building credibility with developers and customers. Another point to keep in mind is valuation. Even after its rally earlier this year, AMD trades at a discount compared to Nvidia on forward earnings. Part of that discount reflects Nvidia's dominance, but part of it is inertia. Many investors haven't yet recalibrated their models to account for AMD's accelerating AI presence. Analysts like those at Truist and Melius have started to do so, raising price targets into the 200s. Thursday's dip doesn't erase that trend. If anything, it may represent an opportunity for long-term investors who believe AMD's story is intact. It's also important to think about competitive dynamics in PCs and servers. Intel aligning with Nvidia may make headlines, but Intel has its own battles. Its PC share has eroded steadily as AMD's Ryzen line gained traction. In servers, AMD has climbed to over 40% share while Intel has stumbled. Partnering with Nvidia doesn't fix those structural issues overnight. Meanwhile, AMD continues to execute and expand. That context often gets lost in the noise around big partnerships. The macro backdrop also matters. The Federal Reserve just cut interest rates, the first step in what could be a series of cuts. Lower rates generally support growth stocks and tech names, even if the immediate market reaction is choppy. For AMD, Lower discount rates on future cash flows make its AI growth story even more valuable. Combine that with secular tailwinds in semiconductors, AI, cloud, gaming, and edge computing, and you have a long-term setup that remains bullish despite short-term jitters. So what should investors take away from all this? The Intel-Nvidia partnership is certainly worth watching, but it's not a death blow to AMD. If anything, it highlights just how competitive the landscape is becoming. And competition validates the size of the opportunity. If AI chips were a small niche, you wouldn't see companies forming multi-billion-dollar alliances to chase it. The fact that they are is confirmation that AMD is playing in the right arena. There's also the human factor. Lisa Su has repeatedly emphasized that we're in year 2 of what she calls a 10-year AI infrastructure cycle. That's a decade-long runway of investment, deployment, and scaling. In that kind of environment, there is room for multiple winners. Nvidia will lead, Intel will try to catch up, and AMD is carving out a powerful position in between. Thursday's market dip was a reminder that the path isn't linear, but the destination remains the same. From a trading perspective, AMD's ability to hold the 157 to 160 range is significant. That zone has acted as support before, and each time buyers have defended it, the stock has bounced higher. If institutions are indeed accumulating shares on dips, then Thursday's action may simply be part of that process. For retail investors watching from the sidelines, it's a chance to see how conviction is built in real time. Looking forward, the catalysts are clear. Product announcements, customer adoption news, and the upcoming Analyst Day in November will all be moments that could shift sentiment decisively. If AMD shows concrete revenue traction from its MI300 and MI350 accelerators, analysts raising their targets today will look prescient. If not, bears will argue that the valuation discount is justified. Either way, the story is far from over. So to answer the big question, what does the Nvidia-Intel partnership mean for AMD? It means the game is heating up. It means competition will intensify. But it also means the market opportunity is enormous, validated by the fact that giants are teaming up to chase it. For AMD, the challenge is the same as it has always been: execute on its roadmap, deliver performance, and prove that it belongs as a first-tier choice in AI infrastructure. Judging by its progress so far, there's plenty of reason to believe it can do just that. In the meantime, volatility like we saw on Thursday is likely to continue. But investors who look past the headlines and focus on fundamentals will see that AMD's long-term story remains compelling. The stock may have lost $1 and change today, but the bigger picture is about growth, resilience, and positioning in one of the most important technology shifts of our time. That's why, despite partnerships, downgrades, and market noise, analysts and investors alike are still paying very close attention to AMD. And that's the story for today's aftermarket. AMD took a hit, yes, but recovered much of its losses, showing underlying strength. The Nvidia-Intel tie-up is a headline risk, but not a thesis breaker. If anything, it's a reminder of how valuable this space has become. AMD is still right in the middle of it, and the question for investors is whether they see this dip as a threat or as an opportunity.